The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. As always, thanks very much for tuning in. My show airs every Tuesday and Thursday, 2 days a week from 3 to 4 p.m. Eastern on TFNN. If you want to give me a call and talk about this market, it's a toll-free number, 877-927-6648. That's 877-927-6648. And if you can't listen to the show live, it's always available as a podcast on iTunes, so you can go download it there. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way. As another reminder, I use charts. I look at charts on my program when I'm talking about individual stocks, and if you want to look at those charts right along with me, you can go to Tiger TV right on the homepage of TFNN.com, Channel 1 specifically, and you can look at those charts and listen to the audio of the show right along with me. And if you get home after work, the show is archived on Channel 13. Okay, so with all of those house cleaning items out of the way, let's take a look at what is looking like another resilient session for the market. Right now we've got the Dow up about 14 points. That's got to be close to its session high. Dow up 14 points to 12,463. Taking a look at the Dow and Tiger TV, you can see a recent breakout over 12,284, and let's see, where was that? It was either this price level here in late October or right here in early December is when you had that the Dow breaking out over that swing point, and it's very close. So let's see here. Yeah, 2,084 was its late October high. So Dow continues to act well. Really, all the major averages are acting well. Let's go ahead and take a look at the S&P 500 as well and see where that is at right now. The S&P 500 is up just over 2 points, looks like, to 1285, and with the S&P 500 you had a recent breakout over 1267, which was right around its 200-day moving average, a little bit above that line, and also a recent breakout for the S&P 500 over 1292, which was its late October high. It's trading a little bit underneath that swing point, but the bottom line is there just are not any sellers around this with this market, which has to be taken as a positive. And we've been talking a lot about the lack of volume in this market. I think headed into Thursday's session, the S&P showed 6 price advances since January 3rd, the first trading day of 2012, and volume has been either average or below average on all of those days when it closed higher in price. So not seeing signs yet that institutional money is coming in from the sidelines, which let's face it, that could be problematic. But I think we just have to weigh the fact that the market is acting resilient. The action in individual stocks has generally been good since the start of 2012, and we're just kind of going with the flow here. Let's finally take a look at the NASDAQ composite and see what that's doing. That is outperforming today, up 11 points or so, 0.4% to 2721. The next resistance level for the NASDAQ is going to be 2753. So it is still about let's see, what is that, about 32 points away from its late October high here. But same with the NASDAQ. NASDAQ's working on a 6-session winning streak. Volume has been average. There's been a couple days where volume on the NASDAQ has come in slightly above average, but even today, I mean, the volume in the market today looks like it's going to come in very close to what we saw on Wednesday. Volume Wednesday on the New York Stock Exchange was 750 million shares. slightly below average, and volume on the NASDAQ yesterday was about average at 1.7 billion shares. So it looks like we'll get pretty close to both those levels in the market today, unless something drastically changes between now and the close. So another resilient performance for the market. Some headlines this morning. First of all, we got news that bond debt auctions in Spain and Italy were greeted generally positively by investors. Spain and Italy had successful debt auctions at sharply lower yields, lower borrowing costs. So that's good. The European Central Bank just stayed put on interest rates. Currently, their interest rate right now is 1%. European Central Bank had lowered in December and November. They had been lowering interest rates, but they stood pat this time around, and that was widely expected. But European Central Bank President Mario Draghi said that there are still some risks to the economy, of course, in Europe. That's no surprise. But he did seem to be confident that recent lending initiatives in the Eurozone are eventually going to work and do good for the Eurozone debt crisis. So headlines remain generally positive out of Europe. Okay, taking a look at oil, down 1.8% today to $99.10 a barrel. Let's take a look at the United States Oil Fund. You can see big wild day of trading for this ETF. It tracks the price of West Texas Intermediate Light Sweet Crude Oil. USO right now is down 2.2%. to $38.05. So definitely a technical sign of weakness here. You can see it's sitting right at its 50-day moving average here. So the USO showing some unsettling action today. It had been moving sideways, bouncing off support levels, but volume pretty heavy in the USO, United States Oil Fund today, amid lower oil prices at the New York Merc. Again, crude oil down 1.8% today to $99.10 a barrel, and the USO popular ETF is taking a hit as well today, down 2.2% to $38.05. In the oil space, a couple of stocks in the news today. Let's take a look at Chevron. Interesting day for Chevron stock. Gap down, getting hit pretty hard today. Shares are down about 2.6% to 104.98. Fourth quarter earnings warning here, and this is kind of interesting because in recent days, we've got earnings season really ramping up in spades next week, the following week, and so far the news hasn't really been great in terms of fourth quarter earnings. We had Oracle, several weeks ago come out with not good results at all. Earnings warning today from Chevron. We had Williams-Sonoma that we'll get into in a little bit. Warn on quarterly results. So the earnings warnings are out there. We'll see how earnings season plays out over the next couple of weeks. Right now, I think there are risks to earnings season, but again, I don't think it's too early to throw in the towel and say that fourth quarter earnings season is going to be bad. Certainly too early to say that. Hopefully the news will be good. But the news from Chevron today warned on fourth quarter results. The company said its refineries will most likely break even in the fourth quarter, while higher oil prices should help profits in its exploration and production business. But Chevron taking a hit today, again down 2.6% to 104.98. It recently tried to break out over $110 a share. That breakout was short-lived, but stock is still holding above support at 103.50. That would be its 50-day moving average. Taking a look at a couple of other energy names here. I haven't been shy saying that the exploration and production space is a very interesting group inside the oil and gas sector. Here's a look at Pioneer Natural Resources. Interesting technical setup here. Pioneer Natural Resources is trying for a breakout over 97.10. The stock right now is up 2% to 96.24, so not far from a swing point, but a little hesitant here, having a hard time getting going. It's trading just slightly in the bottom half of its trading range today, but good fundamentals at Pioneer Natural Resources, and pretty decent chart as well at this point. We can also take a look at Concho Resources, CXO. Concho Resources has a pretty big presence in the Permian Basin area of southeastern New Mexico and West Texas. Pretty good technical structure here. Stock is lagging just a little bit today, down 54 cents to $100.83. But Concho Resources in a decent setup here, vying for a breakout over 105.66. That would be a swing point set back in early December. So I think the E&P group is still a group that can work in 2012. I own a real high-quality E&P firm in my Ultimate Growth Stocks model portfolio. I currently have, I believe, 7 or 8 stocks now in my model portfolio. And at this point, I'm just going to take a look at what is working, and eventually I'll kind of, with my model portfolio, I may have, up to 10, 11 stocks in there, but eventually I'll take a look at what is working the best and what is not working so well. Eventually kind of, prune down a portfolio of 10, 11 stocks down to about 6 or 7, 7 or 8, making sure that my money is in the best performers. That's a key strategy that I follow with Ultimate Growth Stocks, and that is a newsletter I do at TFNN. I normally mention that at the top of the show, but I publish it every Tuesday. It's a weekly newsletter, and then I send out email buy and sell alerts in between. So you get more information about Ultimate Growth Stocks right in the carousel on the homepage of TFNN.com. But I am optimistic about the E&P group. And generally, oil prices in 2012, I'm still expecting an upward move there. So fundamentals overall in the oil group look pretty good. Okay, so that's it on energy. Taking a look at gold today. Gold for February delivery gained $8.10. Another good day for gold. I think it's the highest close since December 13th. Gold's, again, up $8.10 to $1,647.70 an ounce. It's about a gain of 0.5%. Gold benefited from the weak dollar. Let's first take a look at the GLD, Spider Gold Trust, which trades at 1/10 the price of an ounce of gold bullion. It's trading near a session low today, up 56 cents, almost 0.4% to 160.23. Still think the GLD technically is a bit broken. Looks like there could be pretty good resistance for the GLD at the 50-day moving average, which is at 163.36. It's still about 4 points underneath that. So it remains to be seen if the GLD is going to continue to rally here. Certainly if the dollar continues to weaken, which it is weakening today, that should provide a continued bid for gold and in turn the GLD. So U.S. dollar index was recently trading around $80 or 80.76, down about 0.7%. The euro rose close to 1% to $1.28 or so. So let's take a look at UUP, the Deutsche Bank U.S. dollar index bullish fund. See, technically that's still intact, holding above its 50-day moving average, and the FXE, despite recent price strength today, still in a technical downtrend, even though FXE is up close to 1%. We'll be right back, folks.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Before we headed into the first break there, just finishing up our discussion on oil and gold and talking about the GLD. Still a bit broken technically, but if this dollar continues to weaken, it's possible we could see gold continue to find a bid. I wanted to take a look at Yamana Gold. That's AUY. AUY on the New York Stock Exchange. Shares of Yamana Gold having a pretty good day today. Up close to 4% to $15.85. Trading in the upper half of its trading range. It did make a nice move above its 50-day moving average today. So bullish price action for Toronto-based Yamana. It has a not a small company here. Market cap close to $12 billion, and the fact that it's jumped above its 50-day moving average. And you can see it was a resistance level for about 6-7 days or so, but now that it's above that 50-day, looks like the stock could try to make a run towards its recent high of 17, which would be back right in this area here. So Yamana Gold acting well today. Let's also take a look at another high-quality miner, Randgold Resources. It's ticker GOLD, one of my favorites in the space. A stock that got kind of broken here technically, but it is back above its 50-day moving average. Stock is up close to 2% today to 110.93. now that it's back above its 50-day moving average, certainly I think bulls on the stock would like to see this stock kind of stay above the 50-day moving average, which is currently around $108 a share. And who knows, you could see an eventual breakout attempt over its recent November high of around 119, 120. So gold definitely starting to show signs of life here. So those are two names in the gold group: Yamana Gold, AUY, and also Rand Gold Resources. Taking a look at some other interesting charts here. Let's go ahead and take a look at Biogen IDEC, BIIB. Interesting technical setup here. Good relative price strength. The JP Morgan Healthcare Conference started earlier this week on Monday in San Francisco. Biogen gave a presentation earlier in the week, but just like the technical structure here, the stock is setting up nicely. You see a swing point over here of 117.55. Shares of Biogen right now up about 0.5% to 116.34. But the way the stock is trading tells me it could try to take out this 117.55 price level in the not too distant future. So watching shares of Biogen IDEC here, and another good technical setup in this market that I like, a name that I talk about in the restaurant space, Panera Bread, also looking strong here. Remember when the calendar turned in 2012 and we had the indexes up about 3% on January 3rd? There wasn't a lot of volume behind the first day of trading in 2012, but look at what Panera did on January 3rd. I mean, it really crashed. It fell sharply, finished near a session low, closed just above its 50-day moving average, and at that point I was saying, boy, that's kind of abnormal action. And even though volume was heavy, the stock has managed to recover. Now, it has recovered in light volume. So anytime you see a heavy volume decline followed up by lower volume gains, it's not the best of signs, but still, Panera is acting strong here. It did bounce off the 50-day moving average, and after its gap up in October when it reported strong earnings, trading in the stock has been pretty darn solid. So this is another name in the restaurant space that you can't rule out a breakout over 145. That would be the high set back here in early December. So watching Panera Bread. Out of all the stocks in the restaurant group, here's a look at Chipotle. I've talked about Chipotle a lot. Fundamentals are good, and frankly, its chart still looks very interesting. Shares of Chipotle today up 11 cents, mostly unchanged on the day, up 11 cents to 347.71. A little bit of accumulation in the stock recently, but I think I've got a weekly chart here for Chipotle, and I do talk a lot about late-stage bases, and Chipotle is one. Okay, and breakouts from late-stage bases can work. You don't have to automatically dismiss them, but they're more fraught with risk because look at the price move that Chipotle. First of all, look at the price move it made in 2010. 2011, it continued, not as fast a rate as when it went up in 2010, but it's just formed a series of consolidations along the way up, and Chipotle is a stock that, to me, looks long in the tooth. I think there are better opportunities in the restaurant space, but still can't deny Chipotle's relative price strength. It continues to hold near highs and acts pretty well. All right, folks, you're listening to Breakout Investing on TFNN. Heading into break number 2. We'll be back in a few minutes.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Breakout Investing on TFNN. Yeah, so, I mean, my general take, we talked about the market at the top of the show. It still strikes me as a hesitant market. You know, we started off 2012 going gangbusters on January 3rd, big percentage gains for the major averages, but since that point, I mean, we look at if you look at what the S&P 500 has done after January 3rd, it's only up a little better than 1%. So we're just kind of trudging higher here in light volume. So I think there are still reasons to be cautious here, because any time you see low volume gains, whether it's a stock or an index, not the first time you're going to hear me say this, that you have to tread cautiously. Now, that said, I mean, the market's face seems to be changing. You look at the first 7-8 trading days of 2012, and there is some action out there, and I have been putting money to work in my model portfolio, and I've got something to show for it. So hopefully it's gonna continue, but the real question is when the institutional buying is going to start back up in this market, or is it even going to start back up? Hopefully the news next week and the following week in terms of corporate earnings are going to be good enough to bring institutional buyers in from the sidelines, because they are still, folks, they're still not playing in this market, and that means the market could go either way. So we've got resilience. We've got a market face that appears to be changing. It's all positive. We've got pretty good action, or at least an expanding crop of stocks outside of real estate, investment trusts, and dividend-paying stocks that have been working for several weeks. There's a slightly expanding crop of stocks acting well. So this is all good, but continued market strength is going to be predicated on if new money comes in from the sidelines, and that's still a question mark at this point. That's my general take on things. I think that next week it's likely we'll see volume start to pick up on the New York Stock Exchange and the NASDAQ. I don't think I'm going out on a limb by saying that, but average volume these days on the New York Stock Exchange is about 850 million shares, give or take. Average volume on the NASDAQ is going to be, pretty much what the NASDAQ has traded in recent days, right around 1.7, 1.8 billion shares. So, when we start to see the NASDAQ, if we start to see the NASDAQ move higher on better than expected earnings, it'd be nice to start seeing some 2 billion plus share days. And, when it comes to the New York Stock Exchange, it would be nice to see some 1 billion plus share days. So hopefully it'll happen. Again, I think volume will start to pick up next week, but it's going to be predicated on what these financials have to say next week. We've got a slew of high-profile financials set to report: Citigroup, Bank of America, Wells Fargo, and others, and then some high-profile tech reports as well that will likely move the needle either way. So let's hope for some good earnings reports starting next week, and then we've got J.P. Morgan sort of kicking things off tomorrow. We'll talk about what's expected there a little bit later in the show. Markets performance today even all the more impressive because we had a couple of fairly weak pieces of economic data on the home front. Weekly jobless claims, big surprise there. I mean, they jumped unexpectedly to 399,000. It was a much higher than expected jump, the highest level in 6 weeks now, from an upwardly revised 375,000 in the prior week. Economists were expecting claims to come in right around 375,000 this week, so about 22,000 higher than expected. Not the end of the world, but surprisingly weak data there, and also disappointing retail sales for December. We'll get into that when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone. So another impressive performance for the market today, despite some kind of sketchy economic data on the home front before we went into the last break, talking about unexpected jump in weekly jobless claims to 399,000. That's on the heels of a pretty darn good jobs report last week. So 1 week of unsettling weekly jobless claims data isn't going to be enough to spook the market, but hopefully that will just prove to be an anomaly. So we'll see what weekly jobless claims look like next Thursday. Also earlier today, retail sales data for December. Overall disappointing. Expectations were overall for sales to rise 0.4%, excluding autos up 0.3%. The actual data showed an overall increase in sales of just 0.1%, excluding auto sales down 0.2%. So disappointing data there, but the retail sector sure is a stock picking market. Taking a look at some retail names that are doing not too bad today. At last check, Limited Brands now trading back above its 50-day moving average. Shares of Limited Brands outperforming today, up close to 2% in pretty decent volume to $40.26. Not really sure this stock is getting into position for an upside breakout, but it is one of the best run retailers out there, no question about it. Just consistently strong same-store sales growth. Of course, they operate Victoria's Secret and also Bath and Body Works are their 2 main franchises, but Limited Brands having a good day, outperforming. Also like the look of Hibbett Sporting Goods, ticker HIBB. HIBB on the NASDAQ. Volume, picking up from yesterday's level. Stock is trading in the upper half of its trading range today. Working on, looks like 7 straight gains for Hibbett Sports. Stock is outperforming, up 1.6% to $46.99. So, pretty good day for Hibbett Sports. This is a small cap, not a big company. Market cap of $1.25 billion, $1.25 billion. It did pop over some resistance today at $46.86. That would be its high set back in December, and it still has a prior high of $47.22 to deal with. But Hibbett Sports technical picture looking pretty darn good here. So Hibbett Sports, Limited Brands in the retail sector, acting pretty well today. And also, let's take a look at Under Armour. Under Armour, the athletic apparel maker. This stock is also working on 7 straight gains. Got hit hard, came all the way down to its 200-day moving average around 72.70, started to firm up there. Now it's trying to get back above its 50-day moving average. Under Armour is still a broken stock here. Buyers have come back in recent days. It is outperforming nicely today, up 2.5% to 77.70, but its 50-day moving average is at 77.76. So 50-day moving average oftentimes can be a support level for a leading stock, a stock that is outperforming in the market. When that stock starts to underperform, it starts to correct in price, start forming a new base. If it falls below that 50-day moving average, which is what Under Armour did, and it starts forming the right side of its base, which Under Armour is doing now, sometimes that 50-day line can turn into a resistance level. So we'll see if Under Armour is going to be able to get back up above the 50-day moving average. It is right at the line right now, and it could be a ceiling. All right, taking a look at some other stocks today. Might as well take a look at Apple. It is actually not trading too badly. It did hit an intraday low today of 418.75. It is back up off its lows in the top half of its range. It's down $1.16 to 421.39. Interesting to see if Apple is eventually going to be able to break out here. This is another, I kind of describe the overall market here as a hesitant market. It's not, major averages are not acting poorly by any means, but there seems to be some hesitant action in the market, and I would describe Apple's price action lately as hesitant. But you can get hesitant price action when you're moving up in light volume. Volume hasn't been heavy in Apple for quite some time. It's rallied nicely. Starting in the month of December, it was trading around 380, 382 a share, and now it's at 421, but you've got a lot of price gains in below average volume. What Apple could be doing here is etching a handle area. So what you have with Apple is a base that started when the market came in hard in October, formed the left side of its base. Now it's working its way higher, and you see some sellers getting shaken out of the stock here in mostly light volume. So if volume does eventually come into Apple, and I suspect that's not going to happen unless volume comes into the broad market, but you could have a new swing point here of 427. That would be its intraday high of 4 sessions ago. That would be January 9th. So bottom line, Apple is basing. I mean, a lot of people asking me if the stock is buyable. If Apple breaks out in heavy volume and there are signs that institutional investors are getting back into this stock, I think it's buyable. But until then, I think it's a bit risky, especially as we head into earnings season here. Another good retailer here, some news on Tractor Supply. Listen, I talked about this stock as a late-stage base. Late-stage bases are prone to fail, but can't deny Tractor Supply's price performance today. Stock having a big day, up close to 10% to $80.15. Tractor Supply is a farm equipment retailer and basically raised its profit forecast for 2011 thanks to improving sales trends. The company forecast earnings between $2.97 and $2.99 per share, up from a previous estimate of $2.85 to $2.89. Analysts right now are looking for $2.91. It reports earnings on February 1st. But Tractor Supply having a big day, good heavy volume breakout. Let's go ahead and take a look at a weekly chart of Tractor Supply. I think I have one in here. There it is, Tractor Supply. And you can see these weekly charts. They really give a good look of what a late stage or a potential late stage base looks like. Bottom line, what you have for Tractor Supply today is a heavy volume breakout. If you are a breakout investor, shares probably worth a nibble here, but you got to have a tight stop, usually 4, 5, 6% below your purchase price. Bullish day for Tractor Supply. You're listening to Breakout Investing, folks. Stick with me. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close here, put the finishing touches on Thursday's session. Index is looking pretty good here. Here's a look at a chart of the Dow on Tiger TV. Dow is up about 33 points, near its pretty much at its session high to 12,385. Moving on and taking a look at the S&P 500, we'll see that this index is also up near its session high, up 0.3%, nearly 4 points to 12,085. And finally, a check on the NASDAQ Composite, and index is outperforming. Out of the three, NASDAQ is now up 14 points, 0.5%. to 27.25, and really it's the NASDAQ that is getting interesting here. It's only about 25, a little more than 25 points off its recent high of 27.53 set back in late October. So potentially more strength in the NASDAQ here as it vies for a breakout over a swing point. Okay, let's take a look at some other names here as we wrap up today's show. Viro Pharma, VPHM. Really impressed with this stock's relative strength after a huge move. This was back in December, but Viro Pharma acting very, very well. See shares of Viro Pharma were up, it was up close to $4 on December 14th, back on December 14th, and then has just moved sideways, showing relative price strength, holding above support levels. Interesting story going on at Viro Pharma. Last week, the company said it expects to report at least $600 million in revenue in 2012. This year, most of that revenue coming from sales of its drug Cinryze. Cinryze is used to prevent and treat hereditary angioedema. It's a rare condition that can cause potentially deadly swelling attacks affecting the larynx, abdomen, face, things like that. But Viro Pharma is interesting. Good top-line growth in recent quarters. Stock is under accumulation, acting very well here, up 2% to 28.05. And then a couple of decliners here. Not all good news today, despite a good day for the market. Mentioned Williams-Sonoma. Disappointing retail sales data earlier today, and Williams-Sonoma also lowered its full-year earnings guidance for 2011. Home goods retailer now expects fourth quarter earnings between $1.05 and $1.10 a share, below $1.15 to $1.20 guidance earlier this year. Analysts are currently looking for $1.19. So technically, it was actually looking pretty healthy going into today. Didn't look bad at all. Actually looked like it was, trying or vying for a potential breakout here, but big gap down for Williams-Sonoma today. Stock is down 12.1% to 34.33. Might look like it's on sale here, but I typically do not like to buy a stock when institutions are selling, and they are selling in spades today. Moving on, take a look at SXC Health Solutions. Good breakout for the stock on Tuesday. It followed through on Wednesday. Now it's under a little bit of pressure, down $1.71, almost 3% to 62.94. Volume at last check was pretty heavy. Typically when a stock breaks out in heavy volume, what you want to see is kind of a low volume pullback after that. So it doesn't look like volume is overwhelming in SXC Health Solutions today. Still holding above its swing point of $60 a share, but again, SXC Health Solutions is pretty good quality. Not the most actively traded stock. Trades about 400,000 shares a day, but market cap of $4 billion. And no reason to give up on this one yet. Again, still holding above a swing point of $60. All right, folks, coming up next, the Tom O'Brien Show on TFNN. That's from 4 to 6 p.m. Eastern. I'm going to be guest hosting for Tom tomorrow from 5 to 6 p.m. Eastern, second hour of his show. So I'll talk to you then. Have a great afternoon, everyone.